So Sina is another Chinese company that has caught a lot of attention recently, especially since it's been experiencing a dip. And a lot of investors are wondering if this is a good time to get into Sina stock. So what we're going to do today is actually take a look at the numbers for the company over the last few years, see how its revenue has been growing, its profits, and I'll pretty much be providing you information so that you can go out and make a decision on if you want to invest in this company or not. Now this is part of a brand new series that I do plan to start on this channel, so make sure to subscribe down below if you enjoy this content and give me some suggestions of other companies that you want to see this analysis on. Welcome back guys to another video. Hit that subscribe button down below to show your appreciation and your support for content like this. It does take a lot of time to create this content, so if you enjoy it, drop a like, hit the subscribe button, and let's go. So for those of you that aren't aware, Sina is actually a massive Chinese technology company, and they own a company called Weibo, which you may or may not have heard of, which is known as the Twitter of China, and they also operate 3 other business lines. They have over 100 million active users, and they don't just cater to the Chinese market, but they also cater to Chinese people living outside of China. They provide information and news on their main Sina.com website, and like I mentioned, Weibo, which is one of their other big operations, is kind of like the Twitter of China with tons of active users. So now looking at the chart for Sina, we can see here that they've been growing well, but they did take a big hit so far in 2018. I want to get more into the numbers of this, but we'll get into that in a couple of minutes. Before that, I also want to point out that it's currently at a very critical point and is testing a support level that actually dates back all the way to 2016. So now this level is important because if this level holds, we could see a nice rally in this stock, potentially to its all-time highs or even past that. But if this level breaks, we could come down and fill that gap that's between $77 and $82. Now before we run to the numbers, I do want to give a shout out to Hamish. So Hamish actually runs a YouTube channel, and his content I found was very engaging and very informative. I like the information he shares on there, and I was kind of inspired to share my analysis as well after watching a few of his videos. So if you guys want to check him out, I'll leave a link in the description of his channel. Make sure to go there, tell him that I sent you, and I'm sure he'll appreciate the support. But anyways, now let's jump into these numbers and try to figure out what's going on here and if this stock is actually a good buy for maybe a swing trade or short-term trade or maybe even a long-term trade. Alright, so at first glance, this may be a little bit overwhelming, but don't worry, I'll walk you guys through every single step of this, and once we're done with this, you'll have a better understanding of how this company performs and how their financials look. So at the top here, I'm actually going to go over the revenue, operating income, net income, and capital spending. If you're not sure what these terms mean, just do a quick Google search and you'll figure out what the definition for them is in a couple of minutes. So what I did here was I actually went in and tallied the information from 2010 all the way to 2017. But I also have a column here for TTM, which stands for trailing 12 months, which gives us kind of an idea of where the stock is going in the next year. Now underneath that, you'll see my percent growth year over year chart, and you'll see I have some green cells and some red cells, and this will pretty much indicate if we've had growth or we've had a negative growth. Now below that, I kind of just go over what the company name and ticker is, and I have some balance sheet highlights so you can see what cash they have, what debt they have, their price and all that stuff. And then finally at the end, we'll go over some notes and we'll take a look at the chart on the right hand side as well. Okay, so let's actually focus in here on the year-over-year growth percentage, because this is where I feel it's easiest to visualize the stock and try to understand what's going on here. So first of all, if we look at revenue, we can see that revenue ever since 2010, which is when I started tracking this, has been consistently increasing double digits year over year. Now for a company that's in growth stage, this is exactly what you want to see. You want to see those double digit gains, and you don't want to see any slowdowns in this. And so far, Sina has been delivering on this, so I have no concerns there. The next thing if we take a look at is operating income. And here we had a bit of turbulence a few years ago, but they seem to have leveled that out. And in the past 3 years or so, we've had triple digit growth, which is absolutely incredible. And again, for a growth company, this is exactly what investors want to see. Next, we take a look at net income. this is where things get a little bit messy, and this is where a lot of investors could be thrown off. So we've had a few years where we've had positive growth, but last year we actually had negative growth in the company, and so far the trailing 12 months is also negative because of the performance last year. If you look back 2 years ago, we had something like almost an 800% growth, which was what the stock needed to kind of get it set on its rally that it's been on in the last couple of years. Now this is a bit concerning, so this is something that I would keep a close eye on to see if their next quarter will actually push their trailing 12 months into the positive. If it doesn't, that could mean some bad news for the stock because investors are expecting that for the upcoming quarter. So now if we take a look at capital spending, this is pretty much how much money the company's spending just to keep things running. Now here's kind of the opposite. When we have a positive number, that's a bad thing because that means they're spending more money year over year. When we have a negative number, that's a good thing because that means they've reduced those expenses. So far you can see it's kind of been mixed. Some years they've been increasing, some years they've been decreasing. But in terms of the absolute values of the dollars spent, it's been fairly consistent and fairly low compared to its revenue. So I'm not too concerned with that. And now finally, what a lot of investors, especially newer investors, look at first is the stock performance. And the stock performance has been really all over the place. In the last few years, it has been growing. Like I said, we've had double-digit growth actually in the stock year over year for the last 3 years. But so far in 2018, we have taken a hit. And we're currently down 7% since the last trading day back in December 2017. Now this is not necessarily a bad thing. Stock prices move up, stock prices move down. You have to really take a look at the numbers behind the business to figure out if this downward move is warranted. Now in my opinion, the concern around this stock has been because its net income did take a hit last year. And like I said, investors are waiting for that positive net income this year. So if we don't see that this year, I feel that this stock will actually move down and fill that gap that we took a look at earlier. And that might be the point that you might want to get into the stock. But if you do believe that this company, based on its numbers, based on its growth, does have potential to actually grow its net income this year, then we could most likely see the stock run to its all-time highs. Now, even though these numbers do seem all over the place, for the most part, they do have a pretty healthy balance sheet. So these guys have around 4.88, almost $5 billion in cash and investments, and only around $1 billion in debt. So that's a pretty good ratio to have, and it is something that I look for because I don't want to invest typically in companies that have very high debt, because if we do enter a recession scenario, these companies will get hit very hard. The price per share right now is about $93 per share. Their PE ratio is a bit high at around 45, but their forward PE is around 20. So that's actually very tempting, especially for a growth company. To have a forward PE of 20 is actually a very good value. Now finally, these guys do not pay out a dividend, and I wouldn't expect them to pay out a dividend for a very long time because they are a growth company and they are still growing. And therefore they need to actually put in any sort of profits that they make back into the business to grow the business even further. Now to sum this up, really, some notes that I have on this company is that I like that it's been decreasing its capital spending. I like that it's had a significant revenue and operating income jump over the last few years. Now again, if you look at the numbers, it is a profitable business. They are pulling in money. They are pulling in profits every year. So it is a company that is on the right track. Like we just talked about, the forward PE is under 20. So this is again great value for a company that's profitable and in growth. But the one big negative that still stands out is that the net income is down last year. And I suspect it'll turn around this year. But again, that's the big catalyst that investors are waiting to see if Sina can pull in a good quarterly and yearly profit this year. Now again, looking finally at the chart on the right hand side, I've kind of just graphed out everything for you guys here. You can see that the performance in the revenue has just been growing immensely, along with their operating income. That's also been increasing steadily year over year. Of course, back in 2010, they were profitable. Then they dropped to unprofitable, but now they're back to profitable. But again, that net income is what stands out. You can see it's been all over the place. Increase, decrease, increase, decrease. Right now, we're on kind of a decrease, but that could change by the end of this year. Like I mentioned earlier, the capital spending is pretty consistent as shown on this chart. In fact, they've even been decreasing the amount that they've been spending, which is a very good sign. And overall, this company does provide some pretty good potential. Their revenue is growing at a pace that I would expect a large growth company to grow at. But their stock price isn't really reflecting that right now. As you can see from the last trailing 12 months and even the last quarter, the revenue actually shot up at a record 53-54%, but the stock price didn't go up that much. It actually just ended up going down. So once that catalyst of the next earnings comes around, and if we do see some positive numbers here, we could really see the stock move up substantially. We could even see the stock move up on the next earnings run, where it'll actually run up to close to its all-time highs before earnings. But again, that's just speculation. You just have to wait and see if that happens. So what do you guys think about Sina? Is it a company that you would want to invest in based on these numbers, based on the facts that I provided? Let me know in the comment section down below. I'd be really curious to see if you're already invested in the company or you're considering investing in this company. I'd also really like to know your feedback on this type of video. If there's more information you want me to include in this, if there's less information, too confusing, did I articulate the information properly to you? Let me know down in the description below. And of course, I do encourage you guys to join my Facebook group. I did post this up in my Facebook group actually a couple of days ago to give everyone on there a sneak peek. So you'll get a lot of content like that before my YouTube audience does if you join that Facebook group. Leave a link down in the description as well as in the comment section if you're interested. But either way guys, I hope you enjoyed this video. It was a lot of fun making this. It did take a lot of work, so I would appreciate if you drop a huge like and hit that subscribe button. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.